Let's take a look at energy prices at the start of the week. You've got WTI sitting just below $74 a barrel, ICE Brent at $77.40. Joining us right now to talk about what's moving these markets is Amrita Sen, Energy Aspects founder and director of research. And Amrita, I mean, this is really a story of waiting to see what happens with Israel and Iran.
Yeah, and I think today's reaction is as much about the lack of Chinese stimulus details. The market was expecting potentially some more, and just talking to a lot of participants in Asia, they were just expecting more stimulus to be announced. It's not that it won't come, but it could take longer, and they haven't given many details. And then on top of that, of course, everybody's waiting for Iran-Israel to see how it kind of pans out.
I mean, WTI has been up for now 2 weeks in a row. It still can be a little bit of a surprise when you look at that price and realize this is where we stand with all the geopolitical risk in the world right now.
Oh, 100%. I mean, in the past, if we were in a situation like this, I think you and I would be talking about $100+. I think it really tells you how bearish sentiment is. And it's an interesting dichotomy because inventories globally are super low. But the market's kind of looking forward to 2025 and talking about, oh, it is going to be very oversupplied, and somehow kind of has gotten itself into this mindset of it doesn't matter what's going on right now. It is the kind of future and the bearish future that's what's dictating prices today.
Does that lead you to think that there's the potential for huge volatility if something does swing?
Oh, 100%. I think the volatility, especially because the market's so short, we just don't have anybody really who's long right now. CTAs, like the high-frequency traders, are a little bit long, but discretionary funds aren't. So if they are forced to cover, let's say there is a target on kind of Iranian energy infrastructure and then there's retaliation in the region, I think that's when you can see the real risk. And a lot of traders seem to be trading via options these days. So again, if they have to then cover that via futures market, I think you're going to get some significant rally.
I mean, we haven't even mentioned Russia and the potential for their oil being disrupted at any point.
Yeah, and I think the market in some ways is very jaded by exactly that. Since pretty much what I'd say 2019, the Upcake attacks, geopolitics hasn't necessarily led to supply losses. The sanctions here against Russia were never designed to lose Russian barrels. It was about trying to reduce the fine or the revenue going into Russia. So a lot of people bet on losing Russian oil. We haven't. It's just redirected to China and India. And I think that's exactly why the market is so jaded trading geopolitics. And now it's almost like we need to see if there's an actual outage. That's when the market's going to trade this.
So let's talk the supply side at this point. Production in the United States has been a big factor. Does that knock out the possibility of getting to the levels we used to consider being normal in crazy geopolitical situations like this?
So I just came back. I just came from Houston, and I think for me the biggest takeaway there were the biggest and the mid-sized and small-sized Permian producers telling us we're not going to be able to grow regardless of the price because we are running out of acreage. And this year, U.S. production has been pretty much flat. It hasn't grown. And, you know, for all the talk of, like, obviously, very importantly, the geopolitics, we haven't seen any media reports about how poor non-OPEC supply growth has been this year. We all started the year thinking about 1.5 million barrels per day of growth. We're tracking 300,000 barrels per day only.
Well, we keep hearing from reports that the Saudis are saying, look out, if you don't stick to your allotted production limits, we can produce a whole lot more. Is that the case? Can they just turn on the spigots there and flood the market?
Regardless of whether they can, I think that's the nuance that's getting lost because they're not saying we're going to go out for market share. This is not 2020. They're simply saying to those who haven't been complying, it's not like, let's not get into a free rider problem, right? That we are the ones cutting and you guys are taking advantage of us. So what they're saying is we want to go ahead with the planned increase, which is very small, by the way, like 200,000 barrels per day every month for them, and then some others kind of bringing on a little bit more. But that's what they're talking about. They're not talking about going to 12 million barrels per day and flooding the market at all, because nobody wants to create that massive kind of downturn in prices. Then eventually that leads to a spike in prices. They do want some stability. It's just kind of saying, well, if everybody doesn't pitch in, this is what you're going to get.
Sure. And you started talking about the demand picture with China, and we have seen stimulus there. Do you think that will be effective? Do you think we'll see a big demand surge when it comes to China, or stabilization, improvement?
Surge is not, it's a strong term, I'd say, right now. And I think, to be honest, one of the biggest reasons why oil is where it is on the demand side. Chinese demand has been weak. Really, this is the first year we're expecting refinery runs in China to fall year on year outside of a COVID year. So it does tell you kind of the struggles there. But I do think the stimulus is important because at least the government's saying, okay, yes, it's not on its back foot anymore. It's kind of saying, yes, we can at least backstop the economy. We do think the worst is behind us. It stabilizes the economy. Some upside, but I think we'll see it in 2025. There's still a lot of housing inventories to go through before, construction can really pick up.